thank you, obviously, everyone for joining. I'm Lewis Adams. I'm a senior data analyst and economist at the South Yorkshire Mayoral Combined Authority. So obviously, I'll be hosting for you today and trying my best to keep things on track and obviously help Brian and assist him in his presentation. So just to introduce our guest today, this is Brian Sloan. He's a research manager at Transport for the North, and he's currently leading on the delivery of the Northern Powerhouse Independent Economic Review. So prior to his current role, he spent over 8 years supporting the Bank of England's Monetary Policy Committee as one of its regional agents based in North West. He has also held positions with Chambers of Commerce and the Office for Tax Simplification, influencing some key changes to government tax policy in the latter years of the previous Labour government. So in terms of kind of the project we're looking to talk through today, a bit of a background to what to expect. So in 2015, the Treasury quantified this economic opportunity for the North if we were to close this productivity gap between the rest of the North and London and the Southeast. So essentially, this is where Transport for North came in, and working with local enterprise partnerships and other local combined authority partners, they've updated this Northern Powerhouse Independent Economic Review that was started in 2015. And this has again looked at the competitive strengths and capabilities of our region. And so in this session, Brian's going to hopefully talk through some of this refreshed model with us and explain how a new set of economic scenarios were developed and modelled. So this will help to quantify the scale of the new transformational vision for the North economy and recognise some other factors that we're interested in, such as inclusive growth and how this will support our net zero objectives as well at the South Yorkshire Mayoral Combined Authority. So that's a bit of an introduction to the presentation. And just before we hand over to Brian and let him get on with it, so the order for the day. So we're roughly looking at about presenting for 20 to 25 minutes, followed by about half an hour for Q&A, but we'll see how we get on. The first 30 minutes will be recorded as the presentation for those who can't make it. Feel free to write questions in the chat or ask verbally when the presentation is finished. And please put your hand up so I can see the order of questions as well. If you could, it would be great if you could keep your mics muted and your cameras off, just to avoid any distractions from myself and Brian. I think that's it. So finally, without further ado, I will leave you in Brian's capable hands. Over to you, Brian.
Thanks very much, Lewis. Hopefully you can now see I'm sharing my screen.
Yeah.
Excellent. So thanks very much for the introduction. So Transport for the North is the statutory transport body covering the north of England, so the 3 ITLA1 regions of the North East, North West and Yorkshire and the Humber. But this is the Northern Powerhouse Independent Economic Review. Whilst TFN holds the pen in a sense on the delivery of this piece of economic work, we do this on behalf of our northern partners. So I'm talking about the LEPs, the combined authorities, and other interest groups, universities, think tanks, etc., with an interest in the north of England's economy. So we've worked collectively with these organisations across the last 18 months to deliver the work that I'll be talking through today, and we'll be subsequently going forward from today to further produce a fully updated updated refresh of the Northern Powerhouse Independent Economic Review. So Lewis has already given a very helpful introduction to what the Northern Powerhouse Independent Economic Review. But just to reiterate that this was first published off the back of that Treasury vision to close that productivity gap, and in a sense create an economic prize, not just for the north of England, but for the whole of the UK's economy by closing the productivity gap. Now, what the 2016 work did was looked at highly productive sectors across the northern economy where the north had pan-northern capabilities, and those sectors were defined as the 4 prime and 3 enabling capabilities that you can see there on the screen. And the scale of the economic prize, were that productivity gap to be closed by 2050, was a northern economy that was £100 billion GVA larger each year than it might otherwise have been in a business as usual case, and would be an economy that would have supported an additional 850,000 jobs, again over and above the baseline case. But this would have required a whole series of policy interventions across a wide range of areas. So I'm talking to you as an officer of a strategic transport body, and transport is a key enabler of improving productivity in the economy, but it's not the only driver. And you can see there that the 2016 work looked at issues such as skills, enterprise, innovation and technology, alongside that of transport interventions to help close that productivity gap. So why now? Why are we updating this work now? The Transport for the North, as that statutory transport body, has a duty to produce a strategic transport plan. That draft strategic transport plan that we need to publish in 2024 is currently being consulted on. There's a public consultation underway that will close in August. But there's been very much a shift in the economic and political context since 2016, not least a pandemic, the UK's withdrawal from the European Union, but also emerging themes in scenario modelling and policy priorities, not just globally, but amongst our partners. So we've split this update work into two commissions. Essentially, at the start of this commission in November 2021, we undertook a series of work streams that tested the work that we'd undertaken in 2016. We first looked at the structure of the North's economy to understand whether those prime and enabling capabilities remained valid at the level of the North. So looking at ONS data, for example, by SIT codes, but also taking an innovative approach by using other data sources such as the Data City or on business business sectoral capabilities to understand where those strengths were. And that found that the prime and enabling capabilities were broadly remain valid, but as we look forward into the future with emerging different policy priorities, that some of the sectors of the North's economy would be raise up the policy agenda going forward, things like the circular economy, energy production, water, and agri-food. To supplement the analysis of the data, we also undertook some workshops with our 11 local enterprise area partnerships across the North. I realised that it's not just local enterprise partnerships, but often combined authorities, depending on the area. But we split it by the 11 LEP geographies across the North and undertook workshops to understand what the assets were in relation to the prime and enabling capabilities in each of those local areas. And in particularly in a South Yorkshire context, we have a profile that's been produced and showcases the assets that are in South Yorkshire, as well as those in the other 10 LEP geographies across the North. And these will be published on the Transport for the North website in the coming weeks. In workstream 3, the consultants that we'd commissioned to undertake this work undertook a desk-based exercise to understand what the emerging themes in economic scenario modelling were amongst other strategic transport bodies in the UK, but also other economic forecast bodies, think tanks, etc., not just in the United Kingdom, but also in the EU and in the US. And it will be no surprise to you that in the period since 2016, focus has shifted away from purely generating growth and jobs in an economy to ones where we need growth, but it needs to be inclusive growth and needs to address climate challenge, and in the UK context by achieving government's stated objective of achieving net zero in the coming years. This came together in an Insights, Issues and Choices paper that we again shared with partners in the development of the economic scenarios for this work in May of this year. in May of last year. That led to the modelling work on the scenarios towards the end of 2022, and that has now been published on the Transport for the North website. So we now have the outputs from the economic scenario work. But what we need to now do is drive this work forward. So what? We have some outputs, but how do we move this agenda forward? How do we transform the North's economy? So I'm going to talk through the scenarios that have been developed, and then I'll talk through some of the headline results. I'm not going to talk you through all of the scenarios because of the time that we have today, but that just to highlight again that report is on Transport for the North's website. But emulating the 2016 work, which had a baseline business as usual scenario, we have a business as usual scenario here. That's based on Cambridge Econometrics local economic forecasting model for the UK, and then extracts and forecasts for the North's economy. And again, what we see is that if we have a business as usual case, as was the case in 2016, there will continue to be a productivity gap to 2050. So the aim is very much having a transformational scenario that closes that productivity gap. But what the consultants also did in this case is look at the investment gap, that gap in public sector spending that exists here in the North compared to other regions of the UK. And along with partners, we looked at policy levers across that broad range of policy areas that partners wanted to move in order to affect change. And there was 16 policy levers that were agreed with partners, and these came together nicely into 4 change scenarios that could be modelled separately, but when modelled together, create a new transformational scenario for the economy of the North. And I'm going to talk a little bit more about the detail of those change scenarios. So as I've just mentioned, we have a baseline scenario, that business as usual or policy neutral scenario, and then that transformational scenario at the bottom where the change scenarios are all modelled together to create that transformational vision. But in terms of the policy levers within the change scenarios, technology and innovation was focused very much on promoting research and innovation, entrepreneurship, and the adoption of technology, not just across those prime and enabling capabilities, but also across all sectors of the North's economy. In the development supply scenario, this was very much focused on providing the capacity within the North's economy, if you will, to support that transformational vision of growth. So promoting not just commercial development for our businesses, but also social housing and our infrastructure and realm to support that growth in the future, to support the growth in population that would be required for this transformational vision. The inclusive productivity scenario focused on interventions in terms of health and well-being and skills for the Northern economy to help boost that supply of labour, to boost the skills levels that would be required for those highly skilled productive jobs that it hopes to create. And then there is the net zero scenario. I mentioned those emerging policy themes to address that climate challenge. So we have that net zero ambition, which looks at decarbonising various elements of the Northern economy, our transport infrastructure, for example, our industry, our built environment and domestic dwellings, as well as agriculture and forestry. Now, you'll notice that in each of those scenarios, there are figures in brackets. I talked about that investment gap, and what the consultants highlighted, that there is an investment gap across the UK. So what scale of intervention might we be expected to see if we were to level up the economy? And that came to £21 billion per year. Now, I'm going to talk about where that £21 billion came from in that estimate in just a moment. But those of you who've quickly added those figures up will realise that this comes to 31 billion. The net zero intervention was treated as separately from the other three change scenarios, those first three scenarios there, because it's a one-off intervention, not just required in the north, but one that is required across the whole of the UK economy. And this £10 billion a year over 20 years is the scale of intervention that would be attributable to the north based on government estimates for public and private sector investment requirement to address that climate challenge and achieve net zero. So I spoke about that £21 billion. Where did that £21 billion come from? Well, if you look at total managed expenditure in the chart on the right there, you can see that there's a disparity between the three areas of the north and the scale of government expenditure in the devolved nations and London. And this is approximately around £1,500 per head per annum here in the north. So there is a deficit. So if government is looking to level up, you might see that there would be an argument for boosting that spending per head in the north to match the level of the devolved nations and London, which, if you multiply up by the population of the north's economy, comes to that £21 billion per annum of public sector intervention. And as I said, the net zero agenda is treated slightly separately. So taking the scale of these interventions together, I'm not going to talk about the individual scenarios, but when modelled together, this is the result that you have for this new transformational scenario. So if I explain what I'm showing here in the chart, the black line here is the additional GVA from this scale of public sector intervention over and above the baseline. So if we were to see this intervention over the period to 2050, we might anticipate that the economy of the north could be £118 billion a year larger than it would be in a business as usual scenario. Now you can see the cumulative, the scale of public sector intervention across the four change scenarios in the yellow line there. It's coincidental that spending starts to ramp up from 2025. We're doing this work this year, so we take our takeoff for spending by the public sector to increase in 2025. That is purely coincidental, and it's not in any way meant to align with any possible new government. But the spending ramps up on the assumption that the scale of this intervention would take time to gather pace before reaching that full level of £31 billion a year over the period to 2045, before that net zero intervention then tapers off towards 2050. So that's public sector investment, but the scale of this investment creates the environment and conditions for private sector investment to be crowded in behind it. And we see similar impacts on spending by the public sector and the private sector in other parts of the UK, mainly in London and the South East, where things like R&D investment certainly outpaces that in a government sense of that which is spent in the north. So this crowds in private sector investment behind, such to a period that it goes beyond that of the public sector, and by the end of the period is broadly twice the scale of intervention of the public sector. So with this growth, more productive environment, we see a boost, not just to wage levels, but as I mentioned, we also see a larger population in the north. Some of that is a displacement of people from other parts of the UK, and this helps to boost consumption in the north. Now, collectively, these scenarios do require the north to import more goods and materials over the early stages of the forecast, but over the longer term, the North's economy becomes more competitive and moves into a net export positive position over that period to 2050. But I think this is a powerful chart to show, two powerful charts to show. If we look at the chart on the left, I'm showing you in each case the split of that additional GVA by each of the change scenarios. And what you see is that actually in the transformational scenario, which is the black line there, it's much greater than the sum of the parts. And what's happening is you're getting synergies across the four change scenarios. And in a sense, you're not just solving one policy issue in the north, you're resolving a range of policies, and you create these synergies. And that means that the growth achieved is greater than the sum of the parts over that period to 2050. In terms of employment, you can see how, particularly in this chart, how the change scenarios perform differently, perhaps a little bit more clearly than the chart on the left. And you can see that some generate much more employment than others. But when modelled collectively, actually the employment requirement in the transformational scenario is lower than the sum of the parts over that period to 2040. And what's happening here is that competitive labour market is generating capital substitution for labour, so boosting investment as well as boosting wages because of that competitive wage environment, which also has the beneficial impact of further boosting productivity. Now, what I just want to show is some of the key headlines that are emerging from this latest modelling work compared to the 2016 work. I spoke about that economic prize of 850,000 jobs, closing the productivity gap. In this scenario, we see now that there is the potential to create 1 million extra jobs in the North's economy through this transformational vision, and an economy that could be £118 billion a year larger compared to that almost £100 billion from the 2016 work. What I've done in the table there is I've rebased the 2016 work because it was based on 2016 figures, whereas the latest work has been based on 2019 figures. And often when we show this table and talk about some of these headline results, we're often challenged, particularly by our political leaders across the north. What does this mean to the man and woman in the street? And so I've added here that in the transformational scenario, we would expect to see average earnings per worker more than 25% higher than in a business as usual case. I can talk maybe through a little bit more of the detail behind that if we get into that in the question and answers. But I think this is really a powerful table to spend some time on. You can see in the second column here the cost of each of the interventions to 2050, totals some £700 billion. But over the period to 2050, the cumulative additional GVA is much greater in total in the transformational scenario than the four separate scenarios, and totals almost some £2 trillion of additional GVA over that period to 2050, based on this modelling work. Now, this varies by year, but at the moment, the government is taking around 37% of output back in terms of tax revenue. So if you were to assume that that continues into the future, 37% of £2 trillion equates to this £720 billion in the final column there. So again, you can see that what's happening here is, in a pure economic sense, the government intervention over this period to 2050 could actually, in economic terms, pay back to government over the course of that period to 2050. And that's without quantifying those wider societal benefits that would accrue to the population of the North, and achieving those environmental benefits through achieving net zero. I should just talk about these benefit ratios. I've talked about the displacement of population. So particularly in this development supply scenario, the benefit ratio is greater than 3, but because of that displacement of population from other parts of the UK, that perhaps wouldn't be 3 at the level of the UK economy, and would potentially be lower. But these are the emerging messages that are coming out from this work. Indeed, actually, if you look in aggregate at the level of the North, it does vary by sub-region, but in aggregate, the productivity gap, there's been little progress in closing that gap since the 2016 work. So the scale of opportunity here in the North still exists, and that's very much about how we need to pitch this. It's about opportunity. It's not about simply asking for public sector intervention. And indeed, as I've noted in the final slide there, the scale of transformation actually requires an almost equal contribution from the private sector in terms of intervention. So this is very much about creating the environment to crowd in that private sector investment and transform the economy of the North. But that public sector investment does need to be sustained, and does need to be across a wide range of policy areas in order to realise those full benefits and the synergies that will be released through addressing various policy challenges. And I'm going to stop there. I realise that's been a bit of a whistle-stop tour of almost 2 years worth of work and work to come. I'd like to elicit some thoughts on how we might achieve this transformational vision, but also take questions on anything that you've heard today.
Thank you, Ryan. That was fantastic. Very interesting presentation. Thank you for going through that with us.